Good morning, everybody. Welcome to Capital Preservation Friday with PAX. I'm your host, PAX. And this is Penny Lane Blaine, my co-host, PLB, who I, if you guys have not, if you're not able to tell from Penny and our Twitter feed, we are becoming very, very close. Anyway, we're coming to you live from the Place Your Trades podcast network. And today we're talking about Capital Preservation Friday. We're going to talk about the event contracts and what they mean and what I am as a veteran trader discovering what they mean and how fun that they are, besides my two sons who are also playing around with them, my oldest son particularly, so we'll be talking about those things. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. And this is what we are all using at Place Your Trades. The app is free and it's downloadable for anybody. You don't have to open up and fund an account. You just have to download it and get started. So this is what we're all using at Place Your Trades. Use the link in the chat. Please use the link in the chat below to start using the Tradeovate web app for free, where you can follow along and make your own picks. And make sure to like and subscribe to our channel. Never miss a podcast. Make sure, and I do this because I've got the markets on my mind. I got other things on my mind. So I always set an alert when there's a new program. We've got my father-in-law's in the process of dying, so I've missed a lot of the other shows and things, but I always catch up on later. So it's always important for me to listen to other experienced traders as I'm learning how to not only become a better version of myself, but I'm learning how to use these event contracts. So good morning, Penny. Of course, you know me. I'll just keep on talking and talking and talking. How are you, my young sister?
Hi, Pax. This little 30 minutes that we get to spend together on Friday is really becoming one of my favorite times of the whole week. I have just learned so much from you. My trading, knock on wood, has improved so much from just learning from you, and I am so appreciative. So thank you.
Well, thank you for thanking me. But remember, you're the one that's doing the work. I'm just, I get to be a little bit along for the ride. So a lot of the things that you and I talk about, and a lot of the things that you're learning, maybe from my experience and just from what I put together and the process I put together, none of that would matter anything in any way unless you were doing the work to implement it all the right way and asking the right questions and listening and being willing to see things in a different light, which I think that's a perfect segue to be able to see things in a different light. You and I were talking about options and these event contracts, and I'll let you kind of segue into it because you are an options trader. I've been trading for now, my daughter's 27, so 27. No, she's not 27. She's 25. My God, my oldest daughter is 25. So I've been trading for 26 years, and I have never, believe it or not, I have never once placed an options trade. I know nothing, very little about options. What I know about options is just the big markets that I used to make in the NASDAQ for guys like Pete and John Nigerian when they were coming to the NASDAQ to hedge whatever they were doing, looking for a 100 lot or a 500 lot market. Those things were my extent. That's the extent of my knowledge of options. I'm just not an options guy. It's not how my brain works. But you are, and you understand these things. So let's talk about the event contracts a little bit.
Yes. I think saying that I understand options is giving me a lot of credit. I don't ask me a question about options, but I have been actually talking to Anthony a lot this week about just my trading style and options. And my favorite thing about options is that I'm not even to PDT. So if you guys don't know what that is, if you're not a commodities trader, PDT means you have to have $25,000 in your account or you get flagged as a pattern day trader anyway, but to pattern day trade, you need $25,000 in a margin account. Or if you're under $25,000 and you want a day trade, you need a cash account, which means that the cash settles every night. Now, if you're trading equities, there's a 2-day settlement period. If you're trading options, it's just an overnight settlement. So you have your full balance the next day. So trading with a cash account, options really appealed to me because I can buy more than my cash balance, while I can also have it settle overnight. So it's been a really good way for me to try to grow my account in a short time, with just this small amount of money. And the parallels between my option strategy and these event contracts is so strong, because with these event contracts, you don't need a lot of money. You can trade futures. Like right this second, I'm doing a $200 account challenge. Shout out to Flary. He's doing it too. And Alex on our production team's also doing it. We're all battling to see who can grow this account the fastest. And we are trading futures. Like I started with $200. Here we are. I hope we grow this today, but I'm at $255. Trading things I would never be able to trade otherwise. So there's my pitch about why these event contracts are amazing. And it's like a gateway drug right into options. And I love that.
That cracks me up. The way Candy says that always makes me laugh, but it's true. So, I know what strike prices are. I know what puts and calls are, but I've never really traded them until the event contracts. And to be able to look at the markets from the opening range standpoint, like I always do, and the process that I put together using the 30-second opening range that we used on the floor, is important to expand the way that I see the markets and the way that I see things from a very, very, very beginning basic options outlook on it, and that's really, really very, very bare bones. But it's interesting, will the market close above 38.5 today? Will we close below 30, whatever the strikes are? We'll look at them in a second. I don't know. Using my opening range, process, I'll decide, during the trading day. I don't know how Julie and Striz are able to do that, on a Sunday night, how they make their picks, because I can't. We were talking about that the other day. I can't guess. I don't make calls in the market, because I let the market kind of. I'm a momentum-based price action trader, so I'm going to let the market tell me what it's doing, and then I'll make my trades accordingly from there, and then I'll manage my positions the way that I do. One of the things, just real quick, a lot of people, I think, are under the impression that I made the opening range up, the 30-second opening range. I didn't. On the trading floor, the opening range was always defined as 30 seconds. From the time that the Dow theory was invented, going all the way till today with the trading floors that are still in existence. The other day, I posted a daily bulletin that the CME still puts out. They used to, we get it on the trading floor. It was the daily bulletin for the crash of 1987, which is it's a treasure that we still have. My friend Terry Owen has it. I posted it, and I thought it was interesting, because what it did was it showed the opening ranges for the days. The opening range being defined as the first 30 seconds, and that's what I was taught how to trade the breakout of in the NASDAQ. So I'm long above it, and I'm short below it. So, today, right now we're trading at 38.17. Let's assume, just for the sake of discussion, the opening range today is 38.12 to 38.15. I'm going to be long above 15, and I'm going to be short below whatever I just made up the fake opening range, 13. I'll be short below 13 and long above 15. And then the way that I manage my positions is always going to be the same. If I buy 15s and they go offered, I'm out. Period. I'm not waiting for it to go down to the bottom of the opening range. For me, it either goes easily or it doesn't. So these last few days, and these last few days have been really, really choppy. You buy them out of the opening range, and they are 3-4 points in your face in a minute. That's not an expense. That's a loss. Remember, I don't lose money. All I do, but I have expenses. I try to keep my expenses tight so that like any other business, trading is not gambling. It's like any other business. I'm going to spend money to make money. Well, when we have those choppy kind of dangerous markets, the other day I bought 38.52s in the S&P. It was 48 offer immediately. Unless you're a high frequency trading model or an algorithm, you're not going to be able to get out effectively. So I took a loss on that trade. For me, trading is not about how many trades you catch or about how many wiggles you catch or about how many moves you catch even. It's about how you manage the ones that you do catch. And that specifically is every single trade that I make, every trade I make, I'm looking at it as an opportunity to either increase my size, decrease my size, or not trade. Yesterday, I decided that I wasn't going to trade because the market was too violently choppy. So I decided after a couple of attempts, I decided that I was going to protect myself. If the market got obvious to me, then I take a couple of trades, and I did. I sold, and I only sold micros. I sold some micros on Amazon's earnings at 38.10.75. I ended up, the market stayed offered below that, and I ended up pulling some money out of the market. That was it. But my whole thing yesterday was I'm either not going to trade or I'm going to cut my size, and I'm going to manage it that way. And that is what I did. I didn't trade, and I cut my size. But the key to trading, and you and I talked about this so long, if there's a holy grail, if there's a real secret to being a long-term profitable trader, it is to know when to stop trading. First of all, to know when to cut your size and know when to stop trading. For me, it's really simple. I have a really, really simple little system, and it's, and everything to me is very simple. It's not easy because I'm a human being and I want to do things my own way, but it's simple. If I get stopped out twice, I cut my size. If I get stopped out 4 times, I stop trading. So if I buy 52s and the market goes 52 offer and I get out at 51.5, that's 1. If I do that twice, I'm going to cut my size. I want to buy 52s and I want the market to go 53 bids so I can put in a scratch stop and stay bid above that. Those are the trades that I want. That's when they're easy, what I call easy. If it's not easy, I don't want it. Now, if I get stopped out of the opening range 4 times for a short expense, that's it. I'm going to wait for the market to get to one of my targets, and then I'm going to take the trade from there. And my targets are going to be, they're going to be a combination of a lot of different things from, Brian Shannon, VWAP. I use VWAP. I use other things to help determine what my targets are, but primarily I do my work based upon the very same technical analysis that banks and hedge funds use. And it's not many people know it. I don't even want to get into that. But anyway, the point, it's different than what everybody else does, which is why you and I see the same, not what I want to talk about. What I want to talk about is how to decrease our size and when not to trade. And I hope that was important. If it's not easy, I don't want it. If I buy 52s, they go offered, that's 1. If I do it again, twice, if I get stopped out 4 times, I'm done. I'm going to wait. Too much talk.
PAX. No. I didn't even want to stop you from talking because I'm very close to getting over PDT in my cash account. And
Awesome.
One of the ways that I've been able to grow that account is being incredibly consistent with my size. That took me a long time to learn. And now I spend about $3,000 a trade. And it's like in my mind, that's what I'm able to spend. And it dictates how many contracts I buy. It is paramount to my trading to be consistent in that. And I actually have just gained that consistency and have not thought so much about sizing down. So what I do is if I get stopped out twice, I'm done. I don't try to go back in with that smaller size, but as you and I know, as we've been talking about, I am trying to level up a little bit on my trading, and it's just brilliant. What I love, we need to call your system the keep it simple, stupid system. I absolutely love, if this happens, then I do this. And it is just, it makes my brain feel good, right? I'm not like, oh, well, maybe I'll do this or maybe I'll do this. It's not chaotic. It is a systematic way of trading, and I absolutely love it. With that,
I think I was just going to say, I think that a danger, especially for young traders, is that they're trying to blend this and that into way too much, into their trading process. They're trying to blend 3 or 4 or 5 or 6 different things into your process. And so you've got either analysis by paralysis, or you're just, you're too confused in what you're in your trade selection. And so if you're confused in your trade selection, then how are you going to effectively manage it? The whole thing about trading is you can break it down to truly when to go big, go small, or not at all. When to increase your size, when to decrease your size, and when not to trade. That's trading in a nutshell, period. It's that simple. I'm going to be long above the opening range. I'm going to short below it to targets. If the market gets back in, think of the opening range as a room, okay? Like in our fake example, 13 to 15. That's a room. The market, the opening range is never very rarely 2 points wide. 10 to 15, that's the opening range. It's a room. If the market is outside of that room, I want to have something on. I'm long above it, short below it. I want to keep it that simple. If the market gets back inside that room, I'm out and I'm flat. I'm doing nothing until it gets to be easy again, period. Now I got to keep it simple, right? I've got to be looking for spots to increase my size. All right. So I'm long at 15. I've paid for my trade. If I pay, let's say I'm trading a 4 lot. We come out of the opening range, I pay for my trade, I remove my risk, I have no risk. I'm still long 3 and I have no risk. I'm still long 3 contracts with no risk because I move my stop to break even or to a scratch. So now the market gets to my first target. Let's say 15, my first target is 32. I sell 1. Now I've locked in $1,400 worth of profit on, I paid for my trade with 200 or 400. I've also now locked in another 100. I'm up $1,400, $1,600 and I'm quite happy, satisfied, not necessarily happy. Now we get above that next target. I might be looking to add to my position. So I don't want to talk about how to add because I don't want somebody who's on a small account trying to add just because I talked about it today. I don't like to worry about, I don't want to worry about other people blowing up and things just because of something I said. But there is a way, and it takes time and it takes a lot of effort, but there are ways to increase your size without increasing your risk. There just is. And there are more ways to increase your size without significantly increasing your risk. And that takes time and experience to be able to, and really good mentors that know how to do it to get through that. Okay, so now, I've taken profit. I'm up 1,400. I'm satisfied. Now the market extends, and keeps going. I still have 2 on. I've got half my unit on. Now I'm not only am I satisfied with what the market gave me, but I'm happy. And maybe I've added, maybe I didn't. I'm just letting the market run up. Now, if the market comes back down to the opening range and it stops me out, I'm not necessarily happy, but I'm satisfied. And if I'm satisfied, I can detach emotionally from the market. I'm sad. That's what the market gave me. I'm okay with what the market gave me. And I'm going to move on into the next trade. Do I want to take another trade? Do I not want to take a trade? Is this an opportunity to decrease my size? Or is this an opportunity to not trade? And if so, how do I get paid? I can get paid. I get paid in the markets in 2 ways. I can either get paid in points or I get paid in information. Yesterday, the market, the S&P went back up to this very important level that I've talked about in the last 3 previous sessions, and you and I have been talking about all week. 38.71 went up to 38.71 and failed. I didn't have anything on. I watched the market and I got paid in information. So when we got through one of our targets on the downside, 38.11 to 13, I went ahead and I took a short. Now, cut size, only 4 micros, but it was a short, and I took some money out of the market. It was an opportunity for me who've been trading a long time, and I have no problem putting size on. I'll slap them on with the best of them. But I also know, and that's a great story. I also know when to cut my size. I was a new trader, a new big trader in the Nasdaq. And everybody knew on the floor, PAX is a big trader. He's a big trader. So I'm in the Merc Club on a Friday afternoon, and it's sunny. Everybody's having a great. The Merc Club was a private club that we belonged to. Everybody's having drinks and having a great time. There was a name for that. If you were still trading on a Friday afternoon, that was called the Losers Club. Capital Preservation. People that were trading on a beautiful, sunny summer afternoon were traders that were down money. Here I am sweating, smoking my brains out. It's when I still smoke, drinking coffee when everybody else is drinking beer and wine and having a good time. And a guy comes over to me, the guy who actually, he was in Floored, the documentary Floored, he produced it, Joe Gibbons. And he goes over, he's talking to me. He says, "Pax, what's wrong? What's wrong, buddy?" I told him, I said, "I'm getting killed." And He said, look, Steve Prosnewski is a trader that me and Anthony have talked a lot about, the best trader in the S&P pit. He said, Pax, even Pros knows when to go from 100 lots to 1 lots. Even Pros knows when to go from 100 lots to 1 lots. That's the old Joe Gibbons story. That hit me, like a ton of bricks. Holy moly. Pros trades 1 lots? The biggest trader in the S&P trades 1 lots? The biggest S&P traders now trade micros, or they don't trade. There's a lot of different ways to make money trading. There's a million ways to make money trading futures, but there's 20 million ways to lose money. And I have to be on the defensive every single day so I can avoid the losers club on Friday afternoon.
That really cracked me up. I've been in that club so many times on Friday. It really hit me. Right? Pax, we only have a few minutes left and we got to make some picks.
Let's go. All right, let's go.
Are we getting our video?
Prices. Yeah.
All right, no picks. No video.
Transition.
Let's make some picks.
Okay, let's go right into it.
Where do we want to start?
Let's go to the S&P first.
S&P.
All right. So the S&P is pull up the strikes. Let me get rid of that. Okay, pull up the strike list.
Let's do it.
All right. The S&P is trading for $5. I think we're. Of course, I'm going to need to see the market open, right? I'm going to need to see the opening range, but 9 minutes before, let's take. Let's see. Looks like everybody's kind of bearish. Everybody thinks we're going to go lower. Let's take the yes on the 38.50s.
38.
Friday afternoon.
I think Flary's in the chat trying to win this account. Flary, I'm very competitive. All right, we're taking the yes. Is that what you said?
Everybody else, yeah. Let's take the yes and 38.5.
All right. I only have $250. So what's my sizing here?
I don't know. Hold on. Bonds found a low. Gold is rallying. Bonds found a low. Okay. If the bonds can rally, I think. Oh fuck! It's easy. It's $5. Take $20 worth.
I mean, I was going to take 50.
All right, go for it. Go for it.
I
mean, wait. What did Flary do? Flary's long too.
I don't know, but Flary, I'm about to beat you today. I got Pax on my side. All right, let's go.
All right, NASDAQ. Let's pull up the strike list. NASDAQ. All right, so the NASDAQ prices.
Is it? Oh, here it is. Pax, you got to say snazzy nazzy. That's my good luck charm. You got to say it.
Snazzy nazzy. I heard you say that yesterday in your show. It made me laugh. With oh, that was a really good. I meant to tell you earlier. That was a really good show with the Strat guys.
Thank you.
I like that.
I love the Strat.
Really
I love the Strat.
Too.
If you guys are watching this show and you're interested in a systematic way of trading, go to my show yesterday. Watch it with the Strat guy. That guy is
very
the
good.
Best. The bomb.
All right, so the NASDAQ. NASDAQ has the Snazzy Nazzy has been leading on the Spazzy Nazzy. Pair goes along. Everybody calls it the Spazzy Nazzy, so I started calling it the Snazzy Nazzy. So anyway, the NASDAQ has been the weaker of the indices, right? Now the Russell is 3 weeks ago we were talking about 1804 in the Russell. The Russell is still at 1804. It's 16, the two big levels in the Russell to remember, 1664 and 1804. Those are the two really big price levels, okay? So now the Snazzy Nazzy's big price level that coincides with actually 1804 is 11,130. And you guys see me tweet, I guess I don't tweet about it much, but 11,130 to 40. The NASDAQ came flying down yesterday. While the Russell's holding 1804, and the S&P is drifting lower, kind of in the middle of really nowhere. The NASDAQ came slamming down through all of these big levels, especially 11,130 to 40. Now we are above it, and we're going to open above that. And that to me is a sign of a rally. So, do we close above 11,200? I think that's an easy one, but that's kind of an expensive strike at $10. What do you think? If we hold 11,130, I think we get up to that strike of 11,300.
Okay, Flary Flary. I mean, ooh, he's right here in the chat trying to beat me. All right. All right.
No, the 11,300s.
Oh. Whoop.
Because we're above 11,200 now. So that.
Oh.
All right. Yeah. Let's see. Go back to that strike list. Go back to that strike list. Mind games. Leroy Jenkins. All right. Yeah. I would take the 11,300s for sure.
All right. All right. We only have 5 more minutes. So I'm going to take 8 of these.
That's so great.
Larry,
so...
I can't take it. Oh, all right, copper packs. We only have 1 more trade. Let's hit the copper.
Oh yeah, you caught copper big last week. That was good.
Yes.
All right. I think we got to take the nose on copper, but that's kind of cheating. We're down. The copper's down like 2.5% already, isn't it?
It's not. Yeah, there are no rules in the game, PAX.
That's true. There are no rules. Oh, that's awesome. Oh, copper. All right. What do you think, copper? I think we got to take the no, but under. Oh my God.
I mean, this looks good. Maybe.
Yeah. Under 4 even. What's the last traded price on copper now? I can't
Couldn't
see
tell
it.
you.
It's underneath the live part. All right.
No.
Take the nose on 34 even. I mean, that's a pretty far cry from where we are, but it's cheap and it's not that far away. Take it for a few bucks and see what happens.
Watch out, Flary.
Here we go. Here we come.
Let's.
Okay.
Okay. All right. You know what? I will let everyone know on Twitter today how this goes. I'm either going to blow up my $200 account or smoke Flary. So one of the 2 things is going to happen.
Oh,
guys, this was a great show. Do me a favor. Go to placeyourtrades.com, get the app, start trading these with us. It is just a real barrel of laughs. I'm having the time of my life. Everyone should do it. You can learn how to trade futures. I don't see a reason why everyone isn't trading these. Get the app, start trading today. This is my sales pitch. Smash the like button on this YouTube video. Subscribe to the channel. If you want to see me and PAX coming at you with more picks, more content, you just got to show up.
That's it. It's that simple. Holy moly, that's so great. Again, simple. It's that simple. Just show up. Show up.
Happy Capital Preservation Friday, everyone. Yay!
Happy Capital Preservation Friday, everybody. Have a great weekend. Have a blessed and safe weekend and a profitable day.